Good morning. Welcome back. Russell Moore, uh, another segment for Stock Market for Beginners. I kind of went over the last video, the last YouTube that I did. I kind of went over um, the basics of the stock market and I went over a lot of different things. I want to kind of keep this one a little bit more basic and simpler. Well, I should say simpler. The last video was simple too, but I want to start breaking down some variables and just different things. I want to talk about today about stock market tips. Okay, so let's just go ahead and jump right in it, and hopefully you'll enjoy. Be sure to hit the subscribe button and notified. I'll continue to send you videos that I do. Again, this is for beginners. If you know a lot about the stock market and you've been trading for a while, this is not for you. Okay, this is going to be very simple and basic things. Okay, so let's go ahead and get started. The first thing is open up an account. Now, in my last video, I talked about Robinhood and Webull. And the reason why I mentioned those two platforms as opening up an account is Robinhood.com. They also have an app. I have it on my phone. Webull, same thing. I have an app on my phone as well as on my laptop. It's because there's no fees. There's no transaction fees. Some of your other major investment accounts, platforms, firms like Ameritrade, E-Trade, Fidelity, which I do have an account with Fidelity for my larger portfolio. They're going to charge you a transaction fee. At Fidelity, it's about $5, $4.95 every time you buy or sell a stock. Okay, so I just want you to keep that in mind. All right, at Robinhood and Webull, there's no charge, so you can trade for free. All right, so open up an account. Then you want to fund the account. People ask me all the time, well, how much should I start with? Well, I know some people say a minimum of no less than $500, but what if you don't have that? We live in a day and age where people are making money. They have a job, but they're living from paycheck to paycheck. And what I try to do is tell people, even if you're living from paycheck to paycheck, you can find a certain amount of money to invest. How many times have you went to McDonald's or to a fast food restaurant or did something and where you just kind of wasted the money and it could have went on the stock? You'd be surprised. One of the things I mentioned in my last video is I have a Robinhood account. Every Monday, I have it automatically sent to Robinhood. It comes from my account, my checking account, into Robinhood. $30, that's it. So you can start as low as $100. But what you want to do is keep funding it even as you buy stocks. Okay. So every Monday, without me even noticing it, $30 goes. And then you can increase that to 50 to 100 as your finances grow. Okay. So open up an account. The next thing is invest in safe stocks. Number two, invest in safe stocks. What I mean by safe stocks is something like Microsoft, Coca-Cola. Now, here's the thing about it. Microsoft right now is going at about 130, it's about 137 per share, $137 per share. So if you can't afford that, some people might say, well, I can only get two shares. That's 260, 272 or something around that amount. So then Coca-Cola is usually somewhere around, it fluctuates between $43 to $47 a share. Okay. What I mean, though, my point is this: a safe stock, something that's been around, that's proven, that it's not going to tank to zero in the next day or two, or you know what I'm saying? You need something that you can trust, a company that you can trust. Another thing, too, is that say you own an iPhone, you know something about that company. You buy their apps, you have an iPad, a MacBook. You know something about that company. I always encourage people, don't invest in something you don't know about. Do not invest, and I'm specifically talking to a beginner. Don't invest in something that you know nothing about. Coca-Cola. You've heard, who hasn't heard of Coca-Cola? All right. So safe stocks. Okay. When you're beginning, that'll keep your risk very low. All right. That's number two. Number three, dividend and reinvest dividends. We talked last video about dividends. What's a dividend? The company, say, for example, I have stock in Microsoft. Every quarter, they give a payout, a dividend payout to all their stockholders. And it's a small percentage of their profit. That's all I'm going to say, just to keep it simple for the beginner. This, you might ask the question, well, what do you mean? They just give you money on top, do you mean, are we talking about on top of whether the stock has appreciated or depreciated? Yes, this is outside of that. So say you buy stock in Microsoft and you buy it at $137 per share. Okay, just one share, right? And tomorrow it goes up $10 to 147. Well, you just gained $10 in profit, right? It went up $10. You got one share. The dividend has nothing to do with that per se. The dividend is an additional amount that you get from Microsoft every quarter, 4 times a year. They will send it either to your account in Robinhood. If you're in Robinhood, it goes directly to your account. Other platforms, they may send you a check for the amount. And the amount will depend on how many shares you have. Remember, the dividend amount is it's times your shares. So if you have, say their dividend amount is 2%, they give you $2 for every share. Well, if you got 30 shares, that's 30 shares times $2. Got it? All right. So, and then you will get that. That's money for you. Now, not every company does that. Not every company gives a dividend out. Okay. I want to let you know that. Now you can go to dividend.com, put in the symbol or the ticker. The ticker is the abbreviation in which the company stands for. For example, Microsoft. On Wall Street in the stock market, the ticker symbol, the symbol for Microsoft is MSFT. All right. NEO, Chinese car, electric car. They sell electric cars. Okay. NEO, NIO. I'm not promoting these stocks. Okay. I want to make that clear. I'm not promoting them. I'm giving you an example of what a ticker is, a symbol. Okay. It's the symbol or the abbreviation that represents the company in the stock market. All right. So then reinvest those dividends. Reinvest your dividends. Let me give you a little stat. Those that reinvest their dividends and their stock profits make about $1 million more over a lifetime than those that don't, for those that just take their profits and spends it on themselves. Reinvest your profits, reinvest your dividends. Okay. Now, if you reinvest your dividend, that means you reinvest it, your shares go up, your next dividend check will be more. Does that make sense? Good practical sense? Okay, so dividends. All right, number 4, buy when others are selling. Now, this is not a rule that you follow every single time, but generally speaking, this is what has gotten Warren Buffett all of his success. Why does he say that? Buy when other people are selling. When people are selling, there's a sell-off in the market, or what it becomes bear. Bear meaning going down, bull going up. That's basically what it means. So if you ever hear a bull market, bear means it's going down, bull means it's going up. All right. So if it's a bear market and we're selling like during a recession and everybody's selling, well, guess what? That means, say Microsoft is at $120 per share and everybody's selling and it goes down to $70. Think about it. We talked about in the last video, buy low, buy at a discount, sell high. So if it goes down to $70, a lot of people are panicking and saying, no, I'm not going to buy. I'm not going to buy any stocks. I'm getting rid of all of my stocks. That's panic. The true investors, the true investors love those moments. Man, if I could get Microsoft right now for $70 a share, it's going to go back up. Why do I say that? It's going to go back up. What goes down will eventually come up, gang. So you buy at a discount at that point. So that's what happened not too long ago, actually. Microsoft took a dip. As soon as it did, I purchased more stock. I didn't sell, I purchased more. Guess what? It went back up. I profited. Now, the profit or loss doesn't happen. Here's a great thing to know, and I want to reiterate this on every video. Your profit or your loss doesn't take place until you sell it, until you sell that stock. So if your stock is going down and down, you're like, oh no, I'm losing money. You're not, technically you have, but you haven't. You haven't really incurred a loss until you sell it at that loss. If you want to hang in this game, let me tell you something. You got to be willing to be patient. I didn't put that on there, but I want to say that right now. You have to be willing to be patient. If you're trying, most people that begin with the stock market, this is one of the greatest mistakes, is that they're in it for quick money. They want to profit and make all this money really fast. If you're in it for that, now you have some day traders that are having that kind of success, but even those, it's taken them a while and before they got their technique and their strategy down. But when you're just starting, you have to be willing to be patient. Don't buy a bunch of stocks. Here's another piece of advice, another tip. Don't buy about 10 stocks just because you have the money. I'm going to purchase all these stocks. You don't have the time to really pay attention to what's happening with those stocks. I would say when you're first starting, 2 to 5, no more than 5 stocks should you have in your portfolio. And I would say if you're just starting, just get two good solid ones, and just watch and learn and get acquainted with the stock market and how things work. Okay. All right. Okay, good. Number 5, very important. Pay attention to the news. I keep an eye on what's going on with Microsoft all the time. It's one of my stocks. Alibaba is one of my stocks. I have several other stocks, and I'm constantly looking at the news. In fact, I have automatic news alerts coming to me about those particular companies. You can get up on different sites. Another thing is, here's another resource, Investopedia. Investopedia. Get acquainted with that site. It's a teacher, it's a trainer, and you also can get a lot of information from them. Finance, yahoo.com or yahoo.com finance. Okay. These are sites that you can go on to get information and news. Stay up on the news, what's going on with certain companies. I was watching CNBC the other day, and I'm not going to bring up the stock because I don't want the stock to tank. But there was a very important news update about this particular company. And this company, it had been soaring. The stock had been soaring. It's a pretty new stock. But with this news report, I said, wow, when this gets out among the mainstream, because it was on a financial channel, people are going to start selling this stock. So what did I do? I began to cut. I didn't sell everything, but I sold a majority of my stake in that stock, in that company. Guess what? They had a drop the very next day. And I can imagine all the people that didn't know what was going on and why, because they weren't watching the news. All right, so pay attention to the news. It's a great resource. I want to encourage you to watch Fast Money and Mad Money. Mad Money Fast. I probably got the name wrong. Yeah, Fast Money. Melissa Lee is outstanding, her and her panel. They discuss a lot of things concerning the stock market, different stocks, where the markets are going. It's a great way to learn about the markets and what's going on with stocks. They use a lot of terms, and here's a tip. You may not understand at first. You may not understand what they're talking about, but it's like anything else. If you keep listening repetitively and you keep going to that channel, I tape it. It's usually on around 1 or 2 o'clock Pacific time. So I tape it. I tape them every day each week, and then I'll go back and look at every one of them. I try to look at them each day so I can stay up on what's going on. Okay, and then there's Matt Money with Jim Cramer, and so he's very good as well. So watch a lot of channels. Now, I'm not saying that you take their advice on stocks. That's not what I'm saying. You still have to do your own research. Okay, and then the last thing I want to say is there's two types of strategies. There's fundamental analyzing and there's technical analyzing. You should learn both. But when you're first starting, I would go with fundamental analyzing. And what it basically it is um, you're you're looking at the financials of a company, not just the financials, but you're going to look at the fundamentals of that company. So I'll go to Microsoft, and what you can do is go to their website and go to investors relations, or you can Google it. Any company, investors relations, Microsoft, investors relations, Tesla, investors relation, Coca-Cola, investors relation. And that page will come up, you click on it, and it'll give you a lot of information concerning that company. You want to learn how to read a 10Q and a 10K. 10K, an annual report, 10Q is a quarterly report. You want to learn, and there are YouTubes where you can learn how to read those reports. There's a YouTube for everything, gang. So I want to encourage you as I close this segment that you can do it. This is the thing. As a beginner, you might be afraid. I don't know what to do. I don't know what to do. Just start. Here's another a quick thing, but also paper trade, simulation trading, where you're not trading your own money. They have it on Webull and they have it, I believe, on Robinhood, where you can paper trade, where they give you fake money, basically a fake account, and you're able to practice your trading before you put your real money into the account. That's a wonderful way. Now, some people they don't like that idea. I love it. That way you can take risk, and you can see what stocks will do. It's a real account, but it's not your money. All right? So these are my stock market tips for beginners. Have a wonderful day, and don't be afraid of the stock market unless we're in a recession. But if we're in a recession, you learn about options, and you can learn how to make money when the market is going down as well as up. I'm so happy for you. Have a great day.